Hey fellow investors and fellow stock guardians, it's Friday, January 29th, 2021. I'm Hoda, co-founder and CEO of the Stock Card. Today's episode is pre-recorded yesterday because I'm out today. I did try to look into my crystal ball and predict what would happen to the stock market on Friday, but things weren't that clear. So I decided I record a special episode. I will be back to our regular daily market recap report on Monday, February 1st. Today, let's forget about the short squeeze drama and ask ourselves, is GameStop a good stock to buy? No, I'm not crazy, and I'm actually quite serious about this question. What if, after all this drama, the stock price falls to its previous levels and there is an opportunity to buy the stock at a good price? Even if the stock price doesn't fall to its previous level, it's quite fair to ask whether it is still worth investing in GameStop. Why Michael Burry, the guy who predicted the 2008 market crash, invested in GameStop before all the drama? Why is the co-founder of Chewy's decided to join GameStop's board of directors? What do these investors see in GameStop's future that has convinced them to invest their time and money in this company? GameStop is a double-sided dilemma. On one hand, it is operating in the video game industry, which is one of the fastest growing consumer industries in the world. If you visit the company's stock card and click on the growth opportunity, you can see that the video game industry is expected to grow more than 12% per year in the coming years. But also, GameStop is a retailer. With more than 5,000 stores worldwide, it has to compete with the rapid digitalization of entertainment and the rise of digital video game stores by console manufacturers and video game publishers. Not too many people buy physical games anymore, and there are limited reasons for the company's core customers to visit its stores. It's not surprising that if you click on the company's operations on the stock card and look at the sales figures, it has been rapidly declining year over year. The company certainly needs a turnaround to stay competitive in the market and relevant to its customers. Can this ship turn around? If you read GameStop's quarterly reports, you can see the turnaround is already in action. Despite the challenging COVID-19 pandemic impact on the retail sales, in the quarter ending January 2nd, the company managed to grow its sales by almost 5%. The growth is coming from what's known as the console cycle impact. Video game console manufacturers such as PlayStation and Xbox have launched a new generation of their gaming consoles, which has brought customers to GameStop stores, online or offline. The company's digital sales number is even stronger evidence of its turnaround. Digital sales were up by more than 300% in the last quarter. And that's most likely why someone like a co-founder of Chewy's has shown interest in GameStop. Now we can see why Michael Burry was interested in GameStop. Before the recent price jump, the stock was available at a very low price, and with the turnaround story and a strong cash position, Dr. Burry must have considered GameStop as an undervalued investment opportunity. Assuming that the company can reduce its store count, which it has already doing so for a while, and maintaining its customer traffic between its remaining stores and website, with the cash at hand and the appetite for more digital entertainment, there is certainly an opportunity for GameStop to stay around. The turnaround has been possible in retail sector. Case in point is the rise of Best Buy and Target from the list of the next bankrupt retailers to rapidly growing companies and stocks. So let's recap what we learned and know about GameStop. GameStop is benefiting from the new gaming console cycle and the rapid rise in demand for video game entertainment. The company is a well-known brand. The turnaround story has already started. On the negative side, with more than 5,000 retail stores, reducing the store count is a multi-year effort that continues to cost GameStop. Even if it manages to transition to digital, it still has to compete with a whole slew of online stores, including direct-to-consumer operations of console manufacturers and video game publishers. Notice that I didn't talk about GameStop's stock price. Clearly, after the recent outrageous stock price jump, GameStop is one of the most expensive stocks on the stock market, right? Well, it feels almost insane to ask whether the stock is overpriced or not. But let's forget a second that the company's price has jumped by more than 1,200% in the last months or so, and look at it a bit more intelligently. To do so, I'm comparing GameStop's valuation ratios with Chewy's valuation ratios. Everyone thinks GameStop can be the next Chewy's, right? So that's just a fair comparison that we can make. If you compare the two companies' stock cards side by side and click on the first share price section, you can see using some of the common valuation methodologies such as price to sales ratio, even with the recent observed price jump, Chewy's is still priced higher than GameStop. Chewy's price to sales ratio is about 6.4 compared to GameStop's 4.2. Well, did I manage to blow your minds? Even with the recent price jump, Chewy's is still more expensive than GameStop. Alright, so what's the final verdict? It's quite volatile to invest in GameStop now, and there is a chance the stock price can drop quite drastically as a result of the recent drama, but all in all, this is a stock that could still have room to grow if you believe the turnaround can happen and GameStop can become the next Chewy's, but in the video game industry. With that, GameStop directly goes to my 2021 watch list, waiting for the drama to subside. As always, if you like to give a Stock Card VIP a try to research as many stocks as you'd want and follow successful investors' portfolios, such as my Roll with Our CEO portfolio and Windmill Strategy, use promo code Roll with Our CEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I'll see you next week.